Welcome to our 2023 M&A Market Outlook. I'm Fenton Burgin, Deloitte UK's Head of Corporate Finance. Volatile stock markets, rising interest rates, inflation concerns and geopolitical uncertainty all restrained M&A markets in the last quarter of 2022 and will result in lower deal volumes and valuations into the new year. Higher financing costs are adding to investors' pain and impacting buyers' ability to finance deals, with banks sitting on over $70 billion of stuck syndications, deals underwritten at ultra-low rates but not yet sold down. We see the multi-billion-dollar M&A market looking set to remain subdued in the first quarter. Despite these headwinds, we predict that 2023 will be a strong year for M&A activity in the UK. Yes, deal volumes and valuations will likely fall by about 15% on average from 2021's record levels. But this isn't the same as the 2008 to 2009 post-global financial crisis recession, when bank liquidity all but completely dried up. 2023 will be back to historical averages in terms of deal volumes. Of course, much will depend on when investors judge that inflation and interest rates have peaked. But as soon as that happens, we anticipate a rapid and significant switch out of defensive cash strategies into M&A. Three key factors underpin our confidence that the first half of 2023 will see ongoing mid-market M&A deals completing. First, banks and direct lenders remain open for business and well capitalized as a result of institutional investors, insurance and pension companies continuing to pump prime private credit funds in a higher inflationary world where it's one of the few asset classes generating positive real returns. Secondly, private equity funds have raised record levels of £1.7 trillion of so-called dry powder, capital committed but yet to be invested. In the short term, some investors will pause activity whilst valuations adjust to new market dynamics, but we see mounting pressure to invest through the cycle, ultimately driving mid-market M&A activity in 2023. Thirdly, UK PLC has a strong balance sheet, with many companies having taken the opportunity to refinance at ultra-low rates through the pandemic. Digital agendas, supply chain diversification, energy independence and ESG priorities will all continue to drive M&A in 2023. Where's the bulk of the activity likely to be? We see a big pivot into the mid-market, with more investors looking at portfolio, bolt-on and special situations deals. That's good news for private UK companies looking to raise equity or to sell ahead of tax changes. Where are we seeing strong ongoing buyer interest? Today there's a premium for companies demonstrating profitable growth and cash flow resilience. Technology, particularly digital, energy and natural resources, real estate, financial services, industrials, business services and healthcare are all sectors in the spotlight. Separately, with sterling continuing to trade below long-term averages, a range of cash-rich, sophisticated overseas buyers continue to see the UK as an attractive option. So our advice to M&A investors and companies is to look through the inevitable ongoing short-term market volatility and be prepared to capitalize on the opportunities. Thank you for listening. I look forward to talking to you in our next edition, and do get in touch if you want to discuss how the macroeconomic environment could impact your organization's 2023 M&A agenda.